What is going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market as always right here, and then we always jump into the same core companies. The Discord members did vote on some new quickfire round tickers, which can be seen in this bottom column. And if you want to be involved in voting for next week, feel free to join that Discord. It is linked down in the description, along with all of our other free resources. Let's jump in. Into our SPY weekly chart and talking about candle structure and location as always. For structure, we've kind of got this hammer slash doji-esque looking candle. The lower wick is slightly longer than the upper wick, but not by a whole lot, and our body is relatively small and compressed compared to some of the prior week's ranges we've been looking at right there, for example. What's most interesting, of course, though, is the location of this candle. So if we do something like this, and then something like this to delineate last week's range, we of course did close up above that 50% mark. We kind of found support at that 50% mark. So some people might call this an inside bar. Some people might call it a resting candle. Either way, we can't really say that it was extremely bullish because we didn't, build new value to the upside, but we also can't say that it's bearish because it certainly didn't build value to the downside. As a matter of fact, I would sort of classify this as neutral to bullish because, again, that 50% mark, we didn't really take out the lows of last week's range either. So, again, neutral to bullish. It's in the upper 50%, but it's also not doing anything too impressive to the upside. So in terms of the weekly, again, nothing really glaringly wrong here. We'll throw the Fibonacci's on. We haven't done that in a little bit. So if we go from the low of the most recent move to the downside and to the high, if anyone told you that day on Wednesday specifically was a huge red day, that the market was crashing, so on and so forth, I'd really encourage you to just take a step back, throw the Fibonacci's on something like a weekly, and of course what you'll notice is we're not even remotely close to that 38.2% pullback, so everything is all good there in terms of the depth of that day on Wednesday when we saw some sell-side activity. Let's hop into an intraday chart. All right, so excuse me, I said intraday, but I did just mean the daily time frame here on SPY. And what's most interesting, in my estimation, is the fact that we talked about this gap fill here at the support trend line in the midweek market update. And we went right to it. We filled the gap almost to the penny and then bounced and formed a nice hammer candle here on Friday afternoon. So to me, this hammer candle forming at 1, the gap fill area, and 2, the support trend line, all seems to be quite bullish in my estimation. It looks like we could bounce here and potentially revisit the highs at some point this upcoming week. Now, there is, of course, the fact that we do have to consider Wednesday's pretty large sell-side day. We haven't seen something like that in quite some time, so let's just talk about it for a brief moment. In my estimation, this was nothing more than a liquidation break to the downside, meaning that anyone who was sort of buying up at the top realized that we never really saw that follow-through, had to sell, and caused a little bit of panic here in the marketplace. But because we didn't go lower, like much lower, and violate that support trend line and trickle back down into this sort of range that we have been talking about on the weekly watch list for some time, I'm going to classify that again as a liquidation break because it really didn't amount to much to the downside. If that was some true sell side strength, I would imagine that we would have to come back down a little bit further and we wouldn't have seen these green hammers that formed sort of on Thursday and Friday. So we'll truly know if that is the case if early on in the week we do bounce and get into what I would consider this sort of upper balance range that we tried to trade into for 3 or 4 days there. So if we get acceptance back above that 367, I would sort of classify that as more of a liquidation break there on Wednesday, and again be looking for a move to just be yet again just a nice little pullback in a nice controlled uptrend. We did repair this structure. We'll fix the gap there and get rid of the gap fill line, so that will be removed, and I would classify this as a more accurate level of support there at 364.22. So the upside targets. We do have to battle back up into this sort of larger range up here above 367. Then we can target this set of highs in here around 370 and then the all-time high. And then below us, if we do fail, and this does amount to some more selling, this hammer doesn't amount to anything, our targets below are going to be as follow. We have the 362 mark, which is a critical intraday level, Remember, it did come from back here. You can go back and watch the videos, but there's a ton of price history around 362. So watch out for that as key support if this level here at 364.22, ultimately where this super support is coming from, starts to fail to, in this upcoming trading week. Anything underneath and the 50% mark of this range that we've talked about, again, for quite some time will be in play around 358.63. Any more downside targets are getting pretty aggressive to the downside, but we'll talk about 354.60, and then ultimately the line in the sand that we've had for quite some time is that we don't want to see price back below this 352, and the reason we mention that, of course, is the 50 SMA will be there sooner than later and should be providing some sort of super support. It's also this longer term balance that we've been in, and we don't want to head back down to the bottom, because ultimately what that would mean is we have a look above and fail, in which case, of course, the target is always the bottom end of that range that you have essentially failed to break out of. So hopefully that makes sense. You have some targets. You have my thoughts on this red day on Wednesday. Let's continue on with the Qs. So the Qs paint a little bit of a different story, because we know that obviously there was a violation of this support trend line, and now we are trading below it. But until we really see what happens early on in the week, we won't know if this was just a break through time, meaning that we are going to go sideways here, or if we do see some more sell side activity in tech and the Qs here. Again, same scenario with a green hammer candle printing on Friday. It would lead me to believe that we should see some more upside activity, right? The buyers are stepping up and defending this area of lows. We even were able to close it back above our key psychological support there around $300. So that's noteworthy in my estimation. And again, if we do see that upside activity, we are looking to battle back up through this sort of chop zone. I really don't, I think that this one could get out of here if I could get the mouse to work. There we go. That would be a better target in my estimation up there around 305. Anything after that, and we'll map out the all-time high, of course, up here at 308.60. To the downside, if we fail, it's really going to hinge upon that 300 psychological, and then just a quick stint below to 298.31, this sort of double bottom that we formed on Thursday, Friday. If that area of lows fails, which it does look like it would be a weak low, right? Whenever you see two touches back to back like that, really it's the shortest time frame players who are getting involved here. Right? Think about it. Someone who's really involved in the long term doesn't necessarily care about buying and defending the prior day's low. So we really have short-term longs in here that we're buying at yesterday's low or Thursday's low there. So if that fails, those short-term buyers should exit or liquidate their positions, and we could see that downside activity, in which case we're targeting the 293.41 and then super support here at the 289.95, rounded up to 290 if you'd like. Anything below that would get pretty aggressive, and I don't really think that's on the radar unless some sort of news catalyst comes, but we have next support down below from in here around the 282.66 mark. And last but not least, we have IWM Russell 2000 and our small caps, and they just continue to be on fire. I mean, the picture here is just completely different week and week over and over again. And what you'll notice is, once again, we are forming a new balance area. And we've talked about this so many times. Whenever we form a balance, what are we looking for? More excess. So if we break out over the highs here, sort of in this general area of the chart at 191.66. Of course, quick bump in the road at the all-time high, 192.81, but we are looking for a pretty nice move to sort of mirror what's just been happening here in between balances to the upside. To the downside, key support is going to be this one right in here, around 187.68. And you'll notice, of course, that Wednesday's move, although it was down, we pretty much took it all back the following day on Thursday. So we now have a question mark candle, an indecision candle on Friday. Again, it's going to be either a break over the highs or a break down below the lows. The key area you want to see hold as support is our support from the prior balance at 182.26, anything underneath that. And we're really looking at some repairing of structure. We have a gap there from 178.78, fills down to 178 the whole dollar, so about a 75-cent gap fill, right? And, anything below, we sort of have the next balance low, 175.66. That would be quite an aggressive pullback here for IWM. To the upside, as with all of our major indexes that we've been looking at, we're looking at blue sky territories. This one specifically, whole and half dollars, intraday levels that do form. You've made it to this point in the video. I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video is released. YouTube is doing this thing where it really loves to remind me that the majority of you guys watching this video aren't actually subscribed to the channel. So let's see if we can change that and move on, jumping into Apple. The first thing I want to point out is that we're really doing nothing more than forming a number of days worth of balance here, going sideways and not really making a move in any direction, just sideways action. But on Friday, we defended our area of support at 121.07 with a dragonfly sort of doji, a hammer candle, if you will. So I'm under the assumption that the early move coming into the week should be up. And our target here is 125.34. We know that's sort of where we topped out around here as the highs of this past week's worth of trading. If we break out above it, we're looking for a true range double, in which case here's our range. We're going to double that to the upside, which puts us right around that 128.76 target, which is on point with what we had from prior areas of resistance over here. If we do get a failure, though, of that 121 holding as support, maybe the market starts to crumble a little bit more, then we're looking for a move into 119. It has so much price history around it, especially just before the breakout of our resistance trend line. So definitely looking for a super support there as the 50 SMA starts to catch up with it. So first touch bounce, definitely. Anything underneath, and we have the 115.53 mark, which again just has a lot of price history around it. I would expect some sort of action there when we get there, and then anything lower is going to be a failure back into our symmetrical triangle, which you really don't want to see, and coming down into support trend line as well as the 112.32. That's quite a ways away. I don't really think we're going to go there, especially again with our dragonfly doji / hammer that printed on Friday. I think the move here wants to be up into that 128.76 on a larger break of the 125, and then anything after that, you'll notice that there's not a whole lot of resistance in this general area of the chart up to the all-time high at 137.98. So Netflix has some interesting things going on structurally. We have filled this gap, so we'll remove that one. I think this is a more accurate representation of resistance at this point in time at 518.75. So put that one on your chart if you don't already have it. But what's interesting here and the structural sort of shift is that we are forming higher lows, right? So we can draw in a support trend line, something that would look like that. And technically, now we have a ascending triangle, right? We have a rising support and a flat area of resistance. If we can remain in the triangle, it does, of course, favor a break to the upside. So over the course of time, if we come back up into this 518 mark and then break it to the upside, next target above will be the 537.22. Anything above that is our 548.72. And then I believe it's the all-time high after that. So a little ways to run on Netflix here if the direction truly is up. I've been kind of bearish on this one for a while, so I'm just going to play the chart as it lies and tell you exactly what I'm seeing. If we fail this support trend line, that's where things start to shift in terms of mentality at least, because what we have is a move back down into this sort of range that we were stuck in for so long. Netflix finally decided to do something. But if we fail back down into that range, that would be ultimately the most bearish thing, because we would have what I would call a head and shoulders, right? And this would be shoulder 2 somewhere in there. And when the neckline breaks there around that 495, 496 mark, then that sets up a move lower back into the range exactly where we came from, and from there we can break down those lows at 477.62 and come into the major daily flush point that I've told you guys about so much at 467.07. But for now, playing the chart as it lies, we're back above that 50 SMA just by a hair. If we can break out over this 503, again, you have the targets above the 518, and then on any break of this ascending triangle, we talked about higher targets. So here on Tesla, I was sort of wrong in my estimation of this being the balance zone. I think that, maybe, just maybe, that will be the balance zone. So we'll see what happens here. Ultimately, Tesla hasn't really done much. It's right here as opposed to where we made that first really, big all-time high right there on that 607. It's kind of right back to where it started. So let's see whether or not this acts as the balance range. And when I say that, if you haven't watched the midweek market updates, I'm just referring to the fact that, when Tesla does make a large move, it does tend to balance for quite some time. So this very well could be the next sort of balance area on the chart. So we'll see what happens there. Let's assign some values to these higher levels, which we don't have mapped out yet. we have a all-time high resistance at 654.32. Anything below, I would argue that this is certainly an important area on the chart there at 625.79. You'll notice that's where we got a little resistance there on Friday. It acted as prior support, and it's where we sort of closed on the Thursday. So definitely a key area. If we start to break down below this area of the chart, which is where we bounced on Friday afternoon, the 600 round number, then I would suspect we make a move to the low of this large candle from Thursday at 570.75. So watch out for that. To the upside, again, we talked about those targets. If we break this low at 570, see if this low here at 541.30 holds, again, which would really start to establish more of a balance area, something like that. Tesla does tend to do this thing where it does form a symmetrical triangle over time, tightens, and then goes on a break. So look out for something like that in a longer time frame on Tesla. So not a whole lot to be said about Alibaba and what's happening here, just stuck in a sideways balance with another gap above us and another gap after that above us. So poor structure definitely up there, but with this sideways action, there's really no action for us to take anyways in terms of playing those levels. If we get a break of this key support down here at the 261.23, just look for a flush into our next set of lows at 531.81 with a little bit of a hammer candle there printing on Friday. Again, maybe the assumption is early on in the week we want to see a move up to retest resistance. Look out for a potential rejection at the 268 level. Anything above would start to fill our gap. That gap fills from 271 up to 275.72. Anything after that is our next gap. Anything over 280. First, look out for that 50 SMA because it is going to be coming crashing down on us. And then anything after is the full gap fill up here to 290.57. Again, quite a ways away. And with a really tight area of consolidation like this down here, I really don't suspect that we'll be seeing any of those upper gaps anytime soon. You never know. Baba can move. We saw that in here. We saw that in here. But I think that was all news-driven, catalyst-driven. We had earnings, and then we had some, China relations stuff with the U.S. come out, and that acted as the catalyst there. So it would really take some sort of news event to drive Baba into any of those gaps and lower. If that next support below at 253 breaks, we have the 200 SMA on the daily, in which case we would definitely be looking for an intraday first touch bounce there. Facebook just continues to tighten up in this symmetrical triangle. It did print a lower wick, a number of them really, off of our support trend line here, sort of at the 50 SMA, at our horizontal support rather there at the 273 mark. So I'm looking for a bounce in the upward direction. It seems like that's what many of our companies sort of are coming into, as well as the broad market into the end of last week and into this upcoming trading week. The first target is going to be this key level at 278.82. You can see a ton of price history there. So watch out for that to act as a little bit of resistance. But if it can break, the next target above will be 285. I'd probably round this up or adjust this at this point because our most recent price history says that it might be somewhere closer to that 286.69, 286.70 as noted by these highs that are in here, as opposed to the ones that were way back here in price history. So watch out for that. Always be on the lookout for fine-tuning your supports and resistances. Anything above is the resistance portion of the symmetrical triangle, and on a larger break, we have targets above at 297.41 and then the all-time high. Let's talk about the lower break, right? If we fail this support trend line and the market doesn't bounce early on in the week, then Facebook is susceptible for a flush of this support trend line. Look at all the touches we have to it. We're looking at filling up the triangle below here to the 265, and anything underneath will just go one more lower at 259.16. NVIDIA, the same exact story. We have a hammer candle at super support, right, horizontal level, and our support trend line. So it should lead to some sort of, more meaningful bounce than just what we saw there on Friday. If we can clear back above this level at the 523 mark, then I would be looking for a move into that 50 SMA, which should be somewhere around here, maybe 536 as it continues to come down just ever so slightly. Anything above that, and we have a move to retest the top of our balance at the 544 mark. It really didn't do much as it started to break there on Monday morning, started to, try to get some legs, and it just, super fail right back to the bottom of the range, even lower really, to retest that little look below and fail that we had prior. So if it's the same situation, again, just look for the same exact thing to play out, retarget the upper end here. If we do get any sort of crazy move to the upside, next target above will be at 573.50, and then the all-time highs up here at 589. If the super support breaks, then kind of nasty on NVIDIA. We're coming into 504, but really nothing much after that. I guess we actually have this horizontal level to map out. Let's put a value to that. That's going to be here at the 492 mark. You can see that's where we kind of bounced. But really, the next major set of support, like this, I would classify that as like a bump in the road, right? But the major set of support is going to come in lower at 481.71. And next up, we have Microsoft. Let's go ahead and throw in a support trend line on this one, because if we do something like that, although we do violate it with those two lower wicks ever so slightly, you'll notice it does fit quite well with all of our other touches here. If we start to see more of a continuation higher, we're just targeting the top of this chop. Really, Microsoft has been a difficult one to trade. As we talked about so much, we had a prior balance, right? Something here, and then a lower balance, and then a balance smack in the middle of those two balances, and now it looks like we're going to trade back into that area, in which case we can just target the highs that are in here. So let's go ahead and throw a price level on that. If we can grab the right tool, we are looking at a move back to the 216.39. Anything above is sort of next resistance at 218, and then only then we have a little bit more room to run up to our 224.64. Call it 225 as an upper target. To the downside, if we break this super support here, I'd say the most important level is where we have support trend line and horizontal support coming in at the 208.72. If that breaks, we're coming down to 205.91, so call it 206, and then anything underneath is $200 psychological support where we had this double bottom, as well as some prior support from back there. And Amazon is kind of breaking its symmetrical triangle. What was really interesting was the fact that on Wednesday we had a break of the support trend line, and then on Thursday we back tested it, formed an inverted hammer, indicating that, sellers really were taking control. And then on Friday, we just printed a hammer candle like the rest of the market. So really going to be a key early on in the week whether or not we trade back into this range and then potentially break out above the resistance trend line that could be in store. Or if this truly was the break, there was only one last sort of push into the end of the week to save it, and now we'll see a rollover and lower. The target has always been 3,000 on the break of the support trend line, so watch out for that first. Anything underneath is right around 2,900, about $100 lower. If we trade back into the wedge, look for maybe a first touch resistance here, where we have 50 SMA as well as resistance trend line. So look for a little pullback maybe intraday, and then boom, if it breaks, we're coming up to retest that level, our most recent set of highs, which was right around here. We'll call it 32.35, and anything after that, we have 32.87 and then 33.65 as some upper targets. Again, that's quite a little ways away. You'll notice that Amazon's range recently has been super tight and compressed, so don't look for any miracles here unless there really is a catalyst with some sort of technical break and news event, right? They have to go hand in hand. You can't just have a news event. You need that technical break to get active in the stock. If we do have that combination, then maybe you can look at some of those larger targets. Kicking off our quickfire round with SPG, what you'll notice here is that we're breaking out of a longer-term balance and starting to move in the upward direction, first coming into our prior swing high. So we are flagging, right? We see up, down, up, down, up, down, and we did form a hammer candle there, just like the rest of the market on Friday. So I'm under the assumption that we will see some upside action in SPG early on in the week. First target will actually be kind of around here, 92, as noted by those upper wicks, then a retest of the 94.50, and if we can clear that, $100 becomes the psychological magnet. To the downside, though, if this hammer does result in no bounce and we move lower, I would argue that the most important support is here at 82.46, 82.50 we'll round it off to. If we fail back down below that, then I would imagine some chop in this area as the 50 SMA starts to catch up. Been a little while since we looked at PLTR, but of course we have a symmetrical triangle forming in an extremely strong uptrend. I would say if we can clear Thursday, Friday's high somewhere around that 28.10, look for a break of the resistance trend line as we will be setting a new higher high as opposed to a lower high, and then retest the 31.25, and then of course the all-time high after that. You have to imagine that in a strong uptrend like that, we want to continue higher. If we do start to break down though, I would say that a key area of support you all need to have on the chart is this 25.50 mark. If that fails, then it's kind of game over. I would say we're down to 21.16, and we would be looking at not necessarily a symmetrical triangle, but again, more like Tesla, just kind of going sideways in a box like this. That could be the play here on PLTR if that fails at 25.50. Moving over to AT&T, of course, we'll map out this swing high around 31.88, this sort of important set of lows here around 30.50, and I would say for more upside, again, need to clear that Thursday, Friday high at 31, and then we can retest that swing high around 31.88. There's nothing to really look at to the left unless we scrunch up, and next target above is going to be, sort of significantly higher there at 33.25. To the downside, if this fails here, this little double bottom support at 30.50, I would be on the lookout for a move potentially back into this area of the chart around 29.25, because that was prior resistance and acted ever so slightly as support on that day there. One quick thing, if we break out the Fibonacci's, because this was a pretty impressive move to the upside there on Tuesday, if we do something like that, of course you'll notice that we are hanging on to that lower Fibonacci level, which is the 61.8, so the pullback in my estimation is healthy. Next up, we have BA, and what I'm noticing here is that we're forming a new flush point at 228 the whole dollar. If that fails, I would first watch out for a gap fill to the high of that candle, which is going to be at 224.99, so I'd just call it 225. If we go lower, we're looking at 212.83. We are in a strong uptrend though, so only if this flush point breaks would we expect those lower levels. For now, if we remain in the uptrend, and this is just nothing more than a little area of balance, which we've seen this play out over and over again. Again, think like the IWM. It's almost the same exact thing. If we move higher, next target above is almost a doubling of that range. Of course, psychological 250 will be in the way, but a couple bucks higher than that would make a nice upside target. The inverted hammer candle there on Friday is the only thing that has me concerned about potentially flushing these lows, filling that gap, and potentially coming into next support at 212.83. Pfizer has been on a nice move, of course, associated with vaccine news. We have a swing high up here around 43 bucks the whole dollar. Looks like we're pulling back into an area of support, kind of violating it a little bit, but this one's been really sloppy, especially with the news-driven catalysts, kind of sending it all over the place. If we go much lower, I would first watch out for a bump here around 39.67, and then really probably back down to this area of the chart around 37.30. A lot of price data around there. To the upside, it looks like we'll be in blue sky territories if I scrunch this up. Really not much to the left there. I think the all-time high on Pfizer was closer to 44 maybe, so check that out on a longer term time frame, but just treat it as blue sky levels. There's really no recent price data to our left. Checking out Lemonade, which is a newer IPO, 50 SMA is finally starting to mature and show us some true signs of where we could look for support and resistance. I would say here is a support, here is a resistance. We've done nothing this week other than, sort of chop around in there. Certainly some intraday trades to be had on really, really increased volume, so great liquidity in this name. To the upside, if we break out over that $100 mark, let's just call it that for psychological reasons, we're looking at a move into the all-time high at 111.68 cents. Anything above that blue sky territory is above. To the downside, if we flush these lows at 85.39, then the next potential areas of support are, I would argue that this would be one around 77.87 as noted by prior resistance here and then turned into support. Anything underneath that, and we'll just walk it down a little bit lower, I would say here is definitely a key area. 66 bucks, 50 SMA will be there very shortly. Prior area of resistance then acted as support. Definitely have that one on your chart. All right, so Disney, it looks like we have an alert set on it, looking for the flush there on Friday, but that was not the case. It was really just off to the races and on some really extreme volume as noted down below. Sort of in blue sky territories above, there's really nothing to reference above us, and there's a massive gap below us that we can use as reference. If we break out over the highs, of course, look for those blue sky territories. If we break down below the lows, look for the gap to continue to fill. It is a rather large gap, just barely under, that $10 gap mark, so it might not fill in a day. It might take a few days. Maybe it doesn't fill at all. Maybe Disney chops around up here. We'll ultimately have to wait and see what happens. For now, I definitely won't be chasing it up here. I also won't be trying to time a top and looking for any major pullbacks unless we start to fill this gap, in which case an intraday trade may be in store down to 157.31. So on Disney, again, no real action unless you're going to be trading it intraday. We'll break out a 30-minute time frame just for sort of kicks and giggles here. Key support also, it looks like, is going to be at 173.87. Qualcomm also had a really interesting Friday there, as noted by really increased and large red volume. It was much different than Disney, but we have support here at 141, call it 142. If that fails, we're looking for a gap fill down to the high of that candle around 129.36. Of course, that 50 SMA is smack in the middle, going to act as some sort of support if that does start to fill, so watch out for that as a first target, and then maybe hold a piece expecting a little bit lower into that gap as well. Just like Disney, it's a pretty large gap. I don't expect that it will fill all in one day, but it is something that could take a little bit of time. If we see more of a bounce off of this area of support, I will say that we got rejected also at a known area of resistance, right in here. Boom, that's where we sort of topped out on the day around 150. If we can't break that, I would just watch out for some chop in here. If we do break it, look out for the gap fill above. It's like there's a gap above and below here on this specific chart. Gap fills at 152.76. All-time high targets are going to be at 159.13, and then of course to the penny up there at 161.07. BYND has done nothing for a number of weeks now, just going sideways, and that's really what, this is a great potential setup here for a break of our 142 on some true strength. You'll notice that there are no candle closes above that level, only wicks. So if we can get a strong candle close above on some decent volume down below, I would be looking for BYND to come at least into that downtrending 50 SMA, if not slightly higher to our 158.55 level. Again, with our candles here on Friday, it doesn't necessarily look like that's the case. Inverted hammer, so you really want to wait for confirmation on a setup like this. The flush point here, the exact opposite scenario, would be a breakdown below our 135 support, in which case 200 SMA becomes the target. Again, inverted hammer there on Friday. Maybe it is in store, but again, you will need a strong close below that level instead of just a lower wick piercing it. Last but not least, we have Teva, and this one is sort of off of its golden days, if you will. If you remember back, it was a fair-priced pharmaceutical company. It was pretty strong back in the day, and ever since, what was that, 2016, it's really just been on a downfall. So not something you want to be holding long-term here on Teva, but for short-term plays, let's go ahead and have a look at this recent price action, kind of zoom back in here. It looks like we made a strong move up through our 200 SMA, starting to pull back a little bit now. Let's map out some key areas of support and resistance. First of all, prior area of support should act as resistance if we do get back up into it around 1136. To the downside, this area of resistance should act as support if we start to come back down into it. We are sort of forming a double bottom, right? We have two major touches in here, right? So double bottom, 1, 2, break of the neckline here to go long. That would have worked out nice. And now it's starting to turn into a cup and handle, right? We have a cup and we're starting to pull back here and form a little bit of a handle. If that does play out, again, target is first there at 1136. Anything above, and we'll map out this target up around 1277. What you'll notice, although it is a cheaper stock, is that our range here to play within is really not that great. So it might be tough to squeak out some serious profits here if you are trying to just be day trading it or even short-term swing trading it. We talked about upside and downside targets, cup and handle. Overall, in a larger term downtrend, I wouldn't really be looking to get too active on Teva. All right, that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. Remember, YouTube is telling me that a majority of you guys aren't actually subscribed to the channel, so if you've made it to this point, all the way to the end, then what are you doing? If you're not already subscribed, hit that button, turn on bell notifications, and with that, I wish you a green trading week.